Good afternoon, everybody. Thank you for joining us for this, our next session. Over the next 45 minutes, we will discuss the application of Suptech as it is used to help digital payment supervision. This is a very, very topical subject across the world, and we look forward to a very interactive discussion with the three other panelists that I have with me here today. Ana Maria Prieto, who's the head of Payment Systems Department within the Central Bank of Colombia. We have Peter Wirtz, who's a senior economist with the Bank of International Settlements, and Carlos León, who's the Director of Central Banking and Financial Market Infrastructure Solutions at Financial Markets Analyst, FNA. So to my three panelists, you're welcome and thank you for joining us today. So to get us started, what I'll do is I'll give each of you maybe 30 seconds to introduce each other to the audience so that we know who's with us. So Ana Marie, can we start with you, please?
Thank you, Anthony. Good morning, good afternoon, good night for everyone. Thank you for the invitation. And yes, I'm an economist working at the Central Bank of Colombia, and currently we are building the fast payment system of the country. I'm sure I'm going to have an opportunity to explain a little bit more about this architecture and the challenges that we are addressing to make sure that we can have full interoperable digital payment here in the country. Thank you.
Thank you. Peter, we go to you next, please.
Hello, so I'm Peter Wirtz, working at the Bank for International Settlements in the CPMI Secretariat Committee on Payments and Market Infrastructures. So over the past year, I've been working on our report on tokenization in the context of money and other assets. And the report is just out in early October. And one of the implications is for oversight. And I hope to make a link between that report and Suptech in oversight, which is actually a very much a future-oriented topic. Thank
Excellent. You. And Carlos.
Thank you, Anthony. As you already mentioned, I'm the Director of Central Banks and Financial Market Infrastructure Solutions at FNA, which stands for Financial Network Analytics. My duties at the FNA have to do with Suptech, especially, because those are solutions for central banks and financial authorities. So I'm leading a team which develops and delivers Suptech solutions for central banks, financial market infrastructures, and other authorities. I joined FNA almost exactly, this Friday, 3 years ago, before I worked for 16 years at the Central Bank of Colombia doing research in the oversight department, which is obviously FMI driven. Thank you for having me here.
Thank you very much. And last, Anthony Gavin is my name. I've spent a career working in transformation and change in retail banking in Ireland. And the last 10 years I've spent as the lead Suptech advisor for a G20 central bank in the Middle East. I have recently left that bank and gone out on my own as an independent Suptech advisor. Suptech is what I live and breathe every day. So thank you all. So to get started on the whole topic of digital payments, I like to bring things down to their simplest. So at its simplest, digital payments is about moving money from A to B. And no matter which way you look at digital payments, it's all about moving money. However, it is probably one of the areas in the financial sector that has seen the most transformation in the methods and means by which we can actually transfer. And we've evolved from us all having simple debit and credit cards to all sorts of more complicated instruments like wallets, like QR codes being used, online payments, and now we have the whole world of tokenization and central bank currencies and digital currencies all emerging. But at the end of the day, the fundamentals of payments is that you're moving money from A to B. So from a supervisory perspective, the key challenge for supervisors is that they've got to protect the integrity of the system. They've got to also protect the consumer and to make sure the consumer, be it a commercial consumer or a retail consumer, is protected. And fundamentally, Suptech and Suptech solutions that we apply in this space, that's what they're about, is managing the new and unique risks that come with the various methods by which we deliver digital payments. So maybe to open the discussion up, if I go to each of you one by one, and if you could talk to what you see are the key risks and challenges in the digital payments today, and how can Suptech influence addressing these, either how you're aware it's done or how you see the potential of which it is done. So if I may start, Anna Marie, can I start with you with that subject, please?
It is okay, Anthony, thank you. So just to give a little bit of a context of what's happening right now in Colombia, very similar challenge of this country in all of the Latin American region. I believe is very similar challenges that we are addressing, in the sense that we want to promote digital uptake, digital payments uptake in particular. So we at the central bank have been working over the last 2 years in developing a new low-value interoperable fast payment system. This will operate under the name of Breve. That's the reason why I have this name up here. This is a Spanish word that stands for quick and easy. This system will allow real-time, fully interoperable digital payment system 24/7. It will be a modernization of financial transactions and driving digital financial inclusion through the country. Initially, this is an ecosystem that will support transfers and merchants to payments. But probably, and in this conversation that we are having, I would like to highlight the design of the system was thought so to assure this interoperability among 4 private switches that are already in place in the country. And to address this complexity, the Central Bank of Colombia is building a DPI with 2 main centralized components. One that will take care of the settlement of the entire set of transactions carried by these 4 switches. And then the second one is a centralized directory where all the keys or alias of the end user are going to be kept, so that we can route transactions through these 4 switches. So maybe when you take a look at what are those challenges, more from the Suptech or oversight angle, what we are seeing is mainly, I'll say 3 of them. One has to do with how to assure that while protecting the integrity and protecting the end user, we are not building even more frictions in the user experience, or even for those new type of participants or players that we want to welcome them, so that we can have more innovation, that we can have even more competition. So we want to have those PSPs and those TPPs coming onto this game. How to have that balance between, having very strict rules, very strict guidelines to assure that integrity, but at the same time not blocking or building frictions for the end user or for those new type of players. That's like one general, even perhaps more a general thought that we have in the first place. The second one has to do with the speed. Obviously, of a fast payment system, you don't want to have rules or regulations that can affect the speed on which at the end is this the promise that you have for the end user. And the second one obviously has to do with fraud. We have been worried with how the fast payment system can also exacerbate those type of fraud. And how can we assure that not only the central bank, but also all of the participants and players in the ecosystem can build those capacities to understand fraud, to and oversight and prevent, obviously, the fraud. I think that to address these challenges, and I'm sure that, and you have been mentioning some of them, the tokenization, the cross-border, all of the trends that will be here in the next years, to address those type of challenges, we at the central bank believe that we have to keep up a conversation with the industry, a very collaborative approach. I think that's a win-win, to understand and to learn what the players are seeing in the market, and how we can, in that public-private dialogue, better understand what will be the best solutions to address them. That will be like my first initial thoughts on this panel.
Thank you very much. And before I go to the others, might I ask you, when you talked about the real-time and that real-time capability, is that real-time monitoring capability designed from an operations point of view or from a supervisory perspective?
Well, both because definitely for the operation, what we are setting as a promise is that we're going to have 20 seconds for the end user to receive money from A to B in this new ecosystem that will be live by mid-2025. So that's definitely, that's a challenge for everyone operating the system. But then from the oversight point of view, you definitely need to have the technology and the availability, the capacity to understand in that real time what's happening in the system, to identify whenever you have operational issues, but then also to identify probably the fraud, no? And I know that Carlos can go deeper, much more deeper into what are those tech solutions that we are already seeing that are being built on top of these fast payment systems around the world. And I think that we still are in the early phase of learning what additional things we need to address.
Okay, thank you. Well, that probably leads me straight into Carlos, because it's a natural pickup. Real-time supervision is something that fascinates me. So I'm intrigued with how we're going to actually be able to do it. And I have a feeling it won't be people sitting at a screen monitoring and progressing. So maybe you can bring us through some of the challenges and how you see them being addressed.
I will thank you, Anthony and Ana Maria. I think I will address that at the end of my first intervention. So perhaps several messages about the challenges. I think that challenge number one is that we should recognize that supervision is not about banking supervision only. So it is very timely and very interesting that we're talking about payment supervision, digital payment supervision in this case. So this is the first challenge that we have to address, to convince many central banks and financial authorities that supervision is not only about banks, it's about all financial institutions, including how do they transfer value between them. Payments at the end, as you, Anthony, said, it's the movement of money or value. So that's the first, perhaps, a first big challenge. Then the second big challenge, and I want to let's say start from there, the other let's say sub challenges, is that right now we're facing, or we're experiencing, a very interesting time in which we have very different solutions and very different attempts to change what money, payment instruments, and technology is. And this is very challenging for supervision, because supervision, if supervision is to try to understand and try to address the risks of money, payment instruments, and technology, it has a very long way to try to do that. And there are several, and this is when I said that I want to go into three different challenges that result from this big challenge of many solutions regarding money, payment instruments, and technology. And the first one is regulation. I mean, how do we regulate those different kind of money, different kind of payment instruments, and different technologies? At the end, should we regulate technology at the end? That's a valid question. I mean, should we regulate what blockchain is, or DLT, or different payment instruments, or different funds of money? I mean, should we regulate the stable coins or not? I mean, I think those regulatory boundaries are very interesting very interesting topic, and they have become a challenge. The second one is something that has to do with monitoring. How a central bank or a financial authority is able to monitor payments. So there are challenges, and that's the whole point of Suptech related to payments, because we are used to do like the usual bank reporting supervision, which is very simple. Let's have a dashboard that shows how the liquidity coverage ratio is moving for different financial institutions, how the solvency, liquidity, so on and so forth. But monitoring liquidity is something that many central banks have not developed or have in their toolbox, and that's very important, not only for oversight of the payment system, but also for monetary policy and for financial stability. And the third one, and here's what I am going to overlap with what Ana Maria and Anthony, you were mentioning about fraud, is consumer protection. How can a central bank and a financial authority, via Suptech, have the right tools to prevent fraud and scams from happening? And also, and this is something that perhaps I will talk a little bit more afterwards, is not only about detection, it's about solution, about how to trace the money when a scam or a fraud occurs and how to recover that money. Because at the end, if there is something happening, I mean, if Peter sends $100 when he received an scam and an SMS that told him to send $100 to Ana Maria just because otherwise his account was going to be closed, and he realizes he was scammed, at the end the solution is not, someone scammed you, that's fine, and we can block his account. It's also about Peter being able to recover his money. And at the end, consumer protection, right now, because of the advances in payment technology, especially account-to-account payments or fast payments, the struggle is with fast payments which are interoperable and that make the recovery and the tracing of the money very difficult. So that I will stop here in this regard. You're mute, Anthony.
Sorry. Thank you. Before I go to Peter, in terms of the different types, you mentioned different examples there. So you have examples of where we want to detect fraud at a transaction level. And you also have examples where you want to obviously monitor and track the patterns of behavior that's going on, which is highlighting a more systemic approach to fraud. Is it the same solution or is it different solutions?
I would say those are different solutions. I mean, most banks or payment system providers, they have already know your client, they have behavioral profiling, they have some other types of profiling which are like user-centric. So one of the challenges and the struggles right now for payment system providers or supervisors is to have a comprehensive view, like a network view of what is happening into the payments. So you can get a better depiction of the behavior of the participants, but also to be able to pinpoint which accounts most likely are behaving in such a way that they're most likely scammers or fraudsters. And after you have this network built, you can do the money tracing and the recovery in a better manner. So that's the challenge, and that's where we think that the part of fraud and scams is going. Not only preventing, which is very important, but we know that prevention is never perfect. I mean, there's not 100% rate of success in prevention, but also if you have a good tool for prevention, you should also have a good tool for recovery of the money in those cases that prevention is not enough.
Thank you. Peter, we'll go to you next.
Yeah, thank you, Anthony. So as a preparation for this panel, I read this summary, the Suptech 2024 report. And as previous speakers already said, there one of the key messages is that Suptech expands beyond core supervisory areas. And what's really interesting there, I think, is that prudential is mentioned first. 66% of respondents use Suptech there, then AML, cyber, etc. But my topic for today, oversight, is not even yet mentioned. So perhaps next year and in the coming years, we'll have that included in the report. That would be great. And then I would be happy to come back and speak more about that. Not that at BIS in the CPMI, we are responsible for oversight, but we are kind of the standard setter for the principles for financial market infrastructure. So in terms of objectives, so consumer protection was mentioned, but this is more the macro objective of the safety and efficiency of the transfer function. And given that responsibility, we were asked together with the BIS by the G20 to investigate the implications of tokenization in the context of money and other assets. And as I said, that report is out. So I'm not going to do a whole presentation with that report, but I just wanted to zoom in on the implications for market structure in basic for financial market infrastructures and the risks, and also the implications for central banks. And one of the key implications we have in the report is for oversight authorities to monitor those new developments, and we call them token arrangements in the report. So there's always a lot of attention for the asset side, but this is more on to complement that on the infrastructure side. And basically what we observe is that through tokenization, you get potentially a change in market structure where you move more to a platform model, where you have a separation between the operator of the platform and the issuer. So you can have multiple assets on one platform, and that can lead to more two-sided market model, which we know very well from payments, also in financial markets. So that's the theme. And then given this change, we think through the risks in that report, for example, mainly settlement risk, credit risk, liquidity risk, and so on. And then look at the implications for settlement assets, the design of infrastructures, and as I said, also oversight. And so I have more questions than answers, but that's also the role of that report, to set out the questions. And maybe it's good to note for the audience then also to know that we're going to work on that the next years ahead. And that was actually also the start. So at some point, it may then reach also the oversight authorities in terms of what they want to use as Suptech applications. So it's more to trigger your thinking than to have any very concrete ideas yet. Thank you. You're muted, Anthony.
Thank you, Peter, and thank you for bringing in that oversight, that infrastructure layer, the highest level. So we're seeing that from a supervisory perspective, there's different levels, and at each level, it will require controls. So maybe a follow-through question for you. Fundamentally, are the controls the same, irrespective of the mechanism? So in other words, the good principles that you would have with the control of movement in the old days of checks and electronic payments, does the same fundamental principles apply in the new world, or has it all gone out the window and everything has changed?
No, that's a very good question. So I think the principles are still the same. It's still about the objectives are the same, the functions are the same. So it's still about the safety and efficiency of the transfer function in the system as a whole. So central banks have a key interest there, also providing the safest and most liquid settlement assets, central bank money. And but what is changing is the market structure. So the thing is that we think we need to think through many traditional topics again in the context of tokenization, and it's just starting, so the uncertainties are large. But if you look at the history of the CPMI, so the Committee on Payment and Market Infrastructure, we have a report from '92 on delivery versus payment and payment versus payment. So that is now atomic settlement in the new setting. We have reports on the role of central bank money, and now we have to think through what to do with that in a tokenized environment. There is a report even from 2005 on the oversight role. And so, yeah, you can go on and on. So it's very much back to basics, but given the technological change, how do you implement that in the current today's setting and tomorrow's setting, actually?
And I think it's important that we actually make sure that we don't lose sight of the basics, because they set the principles on which we build the new layers based on the new technology and the speed and pace at which things are happening now. Yeah. Okay, to move on. Anna-Marie, if I may come to you next. In terms of the work that you're doing at the moment, and I know you're not directly involved in supervision, can you elaborate a little bit more on what you see as the types of tools you would expect, or the types of applications you would expect to see being applied in your new model as you're implementing it from a supervisory perspective?
Yeah. Since we are going to have this hybrid architecture down here in the operation of the fast payment system, we are going to have centralized models, but then we are also going to have these private switches, and then we have participants and third-party providers, not just providing technological services, but also adding value-added services to the end user. I think that what Peter was mentioning, we need to address tools that can be suitable for all of these layers, and that can be suitable for the needs in the oversight, in the centralized oversight of those components, but then also in the oversight that participants need to take care of for those third-party providers. So we have this direct and indirect oversight at the same time, different layers, but then also those different type of approaches. So when you are talking about the specific tools, I think it even becomes more complex, because it is not like what typically the supervisory body or agency has to take care of just one set of centralized market, but rather you have a very open market, and you have different direct and indirect relationships going on. At the end, we are talking about the same risks and the same principles, but you need to make sure that you have very specific guidelines, so that at least those decentralized relationships that are going to be happening in this ecosystem can go back to those guidelines and have a very harmonic approach, in which everyone is supposed to be watching the same risks and addressing them in the correct way. And that's where I think that agencies like the central bank has a lot to do, and has a lot to say from the regulatory perspective. Setting up those guidelines and setting up those specific rules, and if you need to define specific tools, then that's the place where you need to define what exactly are the roles and responsibility of everyone in the ecosystem. We are definitely reviewing in this very singularity architecture that we have, if having centralized tools for the detection or prevention of fraud, for example, makes sense, or whether we should have better to have guidelines, so that on the other layers, those type of participants should take care of having a decentralized tools to trace and prevent fraud, for example, specifically talking about fraud. But this, again, I could say we are in the initial part of the conversation, trying to understand better how this ecosystem will deploy, and what specific tools we should plug into the ecosystem.
Okay, thank you. Carlos, I'm going to come to you now, and maybe you could give us a helicopter view of the different type of Suptech tools that you're aware of that are out there in the marketplace, and not necessarily going into the detail, but giving us a sense of how the Suptech ecospace is here today and how you see it at the moment.
Thank you, Anthony. I'm going to limit what I'm going to talk about. I'm not going to address supervision for banking, but supervision for payments. Once again, the same declaration of how important is the supervision of payments. There are several ways, several different financial authorities, including central banks, are supervising payments. Most of them have to do with monitoring abilities, because this is something that sounds very basic, but most central banks and supervisors have no way to track or to trace how the payments are going through financial institutions. In large value payment systems, in RTGS systems. And that's a very important type of supervision technology, because at the end, the central bank can do a lot of things related to financial stability, monetary policy, and also oversight. The oversight duties of central banks regarding how safe and efficient is the payment system that normally central banks manage, the RTGS system. Also for retail payments, those operators or owners of systems that have to deal with retail payments also need monitoring technology for them to be able to understand how the evolution, how the dynamics of the payments between or among the participants happen. This will allow them to have a very good understanding how the system works. And taking into account that now that Peter mentioned the Suptech Lab report 2024, I'm going to go back 1 year, and I'm going to mention the Suptech Lab report 2023, in which they make a very nice depiction of the two generations of Suptech technology. The first generation has to do with very basic dashboards, very basic, let's say, visualization and quantifying technology, rather averages and very simple bar charts or pie charts. Right now, the second generation, the way for you to start, I mean, you as a supervisor is having technology for you to understand how the interconnectedness of financial institutions happen. And for that, you can do many things. One is using payments as like the link between the financial institutions. Other is to use exposures. The other is using, for instance, financial reporting to infer those exposures for instance, common exposures or for having similar structures of their financial statements. So those are the ways that right now we're seeing how supervision is evolving and how Suptech is evolving to provide central banks and other authorities to have a better view, to have a better tool set of methodologies to have a better supervision of the entire financial system.
But in terms of the tools, I mean, are like the traditional Suptech is you're giving data in, it's usually behind. What we're talking here about is the need to be able to monitor and track capability as it's happening. But you can't have supervisors up at 5 o'clock in the morning to track what's happening right now. So in Suptech terms, what are the tools that should be applied in this space in order to be able to support that and deliver that capability?
I would say that something which is very basic. It's using graph technologies, I mean, network technologies in the sense of network analytics, network visualization, because that tells a lot, that gives a lot of insights that normally central banks and financial authorities do not have. And one important thing that perhaps I should emphasize a little bit is that normally all central banks and financial authorities have a lot of data about payments and about how the exchange of value or money happens in the economy. And normally central banks are doing nothing with it. Normally central banks and supervisors love using the usual banking reports, which is fine. I mean, we're not saying that should be replaced, but should be augmented with all the payments data that it's available. Easily available, in fact, and using this type of methodologies as network analytics, network visualization, graph AI, which is something that is it's happening right now, which is using machine learning based on data sets which are networks, which will give you like a better depiction of how the behavior, for instance, of the users occur, and to try to predict things with those graph AI or graph machine learning methods.
Okay, so just to recap, network, which is monitoring what's happening at a pattern level within the network to see where it's going. And then you're also saying you use AI and machine learning to get in underneath the skin of the data to understand what's actually happening and to look for the patterns and trends that are happening within the data.
That's a good summary.
Okay, thank you. Peter, you mentioned earlier the market infrastructure work that you're doing. Can you talk a little bit about the future? Because I know this whole area space of tokenization is going to open up an awful lot more. And you mentioned that we haven't quite figured out the supervision end of it. But what do you see as the key challenges? And more importantly, you know, do you even at this early stage have a sense of the type of Suptech solutions that's going to be needed in this space?
Well, that's a very difficult and therefore good question. So what we see in the infrastructure space is, of course, the development of what we call token arrangements. And token arrangements are programmable platforms and the participating entities that enable financial market functions by using digital tokens. So that's a whole mouthful. But what it says deliberately financial market functions and not just the transfer function, because if you look at the platforms, that they can integrate a lot of functions from issuance, recording, trading and settlement. So that's much broader than previously where this was done more step by step. And as I said before, that changes the market infrastructure. And just only one of the aspects is for the oversight role for central banks. So central banks in their oversight role are used to look, for example, at CCPs, payment systems, security settlement systems. And now we have this new potentially infrastructure emerging, because not all programmable platforms are also financial market infrastructures. And we need to figure out, where does it take on the role of a financial market infrastructure? And that is actually what we write as one of the implications in the report. So for central banks to start monitoring this. And that's actually very complementary to what Carlos said, because one thing that central banks do is actually look at the payments data given the infrastructure. For example, in the RTGS, there are studies, of course, done, and it was also done in the central bank where I used to work, on the network effects in the RTGS system. Those are, by the way, very time consuming, and it's very difficult to have the researchers that are able to do that in a good way with network theories. But this is actually something complementary. This is kind of, how is the infrastructure itself evolving? And that is the question that we pose. And where does it become a financial market infrastructure? And then how would you then organize the oversight function? And so the question I have, I would like to put it back to you, actually. So what can Suptech then do to help that function? Well, one of the things that I'm doing with my colleague Anneke Kosse is we're having a paper that will come out hopefully end of January. We call it Let's Speak the Same Language, where we try to have one model, which we developed with computer scientists, for describing infrastructure in payments. So all from the basics, from cash payment to deposits, but also all up to wholesale payments, two-tier systems, card schemes, whatever you mentioned. And to get a conceptual model, and because you first need a model to describe actually the infrastructure, how it is developing. And yeah, so if you have ideas on how Suptech can contribute to that, that was a bit my starting also. It's very new, actually, I think, this whole idea. So you're muted,
Anthony.
Thank you. And there's a challenge. For me, the fundamental principle that's out there is we should be designing Suptech in from day one. So Suptech shouldn't be an afterthought. It shouldn't be something that comes 2 years after the system has been implemented, after the manual processes and controls have been put in place, and then somebody says, let's digitalize them. So supervision should be a byproduct of a process. So if nothing else, we need to make sure that we bring to the table the supervisory requirements from day one at a principal level. And we are in a world of digital payments, and everything should be digitalized. And our mindset has got to be to digitalize from day one. So to me, supervisors are a stakeholder, and they need to be involved at the very design from a principal point of view, all the way through to solution and how we implement it. But anyway, that's my piece from the pulpit, if I may say that way. Now,
and in the chat, I see a very good remark on graph technology and even real time. So I would be very interested to learn more about that, indeed.
Okay, thank you.
We're also trying to do a graph model.
So we do have 2 questions that have come in targeted for Carlos. It was picking up on the points that you made about the recoveries for the defrauded funds. So the question from Maria: what systems are used to recover defrauded funds? And secondly, how do these observe privacy regulations? So I'll give you an opportunity just to do a quick response there, please.
So about the question about recovery, that's something that is related to also to what Peter was mentioning. I mean, how do you design a graph that is, let's say, immediately available for a monitoring authority or for the central bank or for a payment system provider? So that technology exists. It's a matter of having the data and having the ability to especially because retail payments right now, the main issue is not that there are fast payments. Fast payments, we have that a long time ago. The problem is fast payments with interoperability. So if I'm able to send money in just a split second from my account in Colombia to an account to Anthony in the UK, and if it's a scam, who is able to see that? So the problem is not the technology, because the technology is there. I don't want to do a commercial here, but FNA does or provide this kind of technological solution to do the money tracing and to do the fund tracing to recover the money. But the great problem is how to coordinate the different agents the different authorities and the different when I say agencies, commercial banks and payment system providers, to make the information or the data available for someone. It could be the police, it could be the central bank, it could be a supervisor, it could be the consumer protection authority, to see that network of all the interoperable payments, to do something and to be able to recover the money. That I'll stop there because we received a message that we're running out of time.
So fundamentally, it's not about systems, it's about protocols, and it's about the ability to ensure visibility of data and the recovery protocols agreements being in place between different players. So even across borders, that you've got to be able to issue an instruction to refund.
Exactly. And the thing is that this kind of technology will allow better investigation, shorter investigations, which are more effective, and that will allow to increase the rate of recovery, successful recoveries for the consumers, which is at the end, we think is the most important part, besides detecting the scams and frauds.
So then when we take to the second question, which was observed privacy regulations, normally they don't identify individuals in the transaction, it's just numbers or identifiers. So the protection can be provided at that stage. Okay, we have just under 5 minutes left, or maybe 4 minutes left. So if I may, we can just quickly go around the table for each of us to just take a future lens and look down the next 3 to 5 years. And from your perspective, what do you see as being the real big challenge that's coming down the road that we need to be aware of and we need to manage? And more importantly, if you have, is there a Suptech solution out there, or that should be out there, that you believe should be available and we should all be working on it? Who'd like to go first? Anna Marie, maybe.
I guess that in that time we should be working on the cross-border perspective, definitely. And I'm not sure what's going to be the tool in the Suptech area, but we definitely will have to have data analytic to understand how to these kind of integrated systems among countries will work, and what type of information we need to have to make sure that the system is going to be pertinent for all of the end users. That's something in which central banks are already working in the region, and we are getting addressing that collaboration among the institutions. But it's definitely a big challenge for everyone in the industry.
Thank you. Peter, would you like to pick the point up now?
Yeah, thanks. So the part of the regulated financial sector that is using what we call in our report token arrangements, so an infrastructure based on programmable platforms, is still pretty small. And it's also uncertain how it's going to develop, but it's also growing. And just by reading the news, I see a lot of initiatives almost day by day, both on financial market functions, so basically settlement of financial securities, but also in cross-border payments. We see a lot of initiatives, for example, by card schemes recently, and also in the field of securities financing transaction. And so it's a great time for central banks to start monitoring those developments and to see kind of what is our role here as oversight authorities, given that our responsibility for the safety and efficiency of the transfer function. Thank you.
Thank you. Carlos.
Okay, I have like two sides. The first one perhaps is what is going to come in the months or years to come is what to regulate and how. So once again, I'm going to mention my stablecoin thing that I mentioned at the beginning. How different is a stablecoin from an e-money provider? It's not very different. What changes is the backing they use and perhaps the ledger, the type of technology ledger that they use. But from a regulatory standpoint, perhaps they are very similar. So how is regulation going to deal with that? So I think that the first thing that we will see in these years is like how regulation is going to deal with that. The second part of what are we going to see is central banks and financial authorities trying to conquer the second generation of Suptech. I mean, going from very, let's say, static, dry, not very comprehensive, not very granular, not very interconnected type of supervisory tools to those things that allow them to have a better visualization, better quantification, and to have like a good depiction of how the system is. Because at the end, the supervisory agency is not supervising institutions only. It's supervising a system. A system, a financial system is a complex system. So there are emerging properties and there are many things that you cannot get out of just supervising financial institutions alone. And at the end, as I mentioned, and this is something that we always hear from many experts in this topic, is the technology is out there. 10% of the problem is the technology. 19% of the problem is coordinating, it's governance, it's availability of data. So what I expect to see in the next years, hopefully, is that financial authorities, central banks, are going to say, I need to have the second generation of Suptech, and I'm going to do the necessary to get this going. Data, governance, coordination, so on and so forth. Fingers crossed, obviously.
I think we've run out of time. Now, we do have two questions which have come in. How supervisors ensure comprehensive data collection from decentralized systems whilst respecting the user privacy and data sovereignty. That's a real challenge because you have so many different entities being involved. But at the end of the day, the supervisor has to define the rules and everybody has to play by the rules, because you can't have one entity saying, well, we're not playing the game, and everybody else has to abide by a set of rules. So a lot of it has to be about the clarity, and in the space that Anna Maria works, the creation of the correct policies to be able to drive that. And how are best practices for integrating on-chain data with off-chain information for respective oversights? If somebody has an ability to answer that question quickly in an online answer, I'd appreciate it, but I have a feeling it'll take a bit more than just a quick answer. So in the interest of time, can I thank all three of you for taking part in this discussion? It has really, really been informative. If I was starting my career as a supervisor, I think this session has convinced me that payment supervision is an exciting area to be in, because it's going to be changing fundamentally, and there's going to be lots happening. So with that in mind, and the solutions that will have to be coming there, with that in mind, can I thank each of you? And I really appreciate you giving the time and the engagement that we've had. Thank you very much.
Thank you, Anthony. Thank you, Anna Maria. Thank you, Peter.
Thank you, everyone.